Hey there guys, and welcome back to Alex Invest. As we can see, the markets are once again green today, and right up there with it is our clean energy stocks, right? We can see here FCEL, even it was down this morning but then came back up into the positive, and of course OEG up 11.5% today, right? And this is one that I've been talking about for a while, and I said we're gonna have another breakout soon, and I think we are gonna see that continue here. And then Ocean Power Technologies too, I just talked about this one the other week, and since then, you know, we have seen sort of some huge gains in this one too. Another 16% today. Yesterday, I think we did around 16% as well. So really good stuff there. And I actually, again, see this one continuing. There might be a little bit of a pullback in the meantime. But anyways, today we're going to talk about FCEL Energy and the earnings we've seen here. Yesterday, they came out, right? And at first, I wasn't really sure. But the deeper I looked into it, the more I actually liked it. And the more I'm thinking here to pick up some more FCEL Energy shares now. And, you know, we do see sort of the price up now. And I'll probably wait to pick up shares at around that $15.95 to $16 level. That's where I'm looking to pick up more shares. So not just yet, but I do see it maybe hitting that price. So we'll have to wait and see what we see there. But anyways, let's get into the financial report here. There's a few very interesting things to show you guys. You know, the first one, we'll just start right here, is their cash, right? We can see, you know, they had their financing activities, right, and their share offerings, and we can see we have $149 million in cash and cash equivalents. So this is great to see. This company has a bunch of cash to work with. You know, they're not going to run out of cash here, and they can use it all to sort of continue to increase their business and their operations here, right? And sort of continue to grow here up until profitability, right? We're still here not profitable. That's something to note, right? We're actually at a higher negative EPS than we were supposed to be at negative 0.04, and we're at negative 0.08, but we'll get into that soon here. Now, their statement of operations and comprehensive loss is really where I wanted to start here, right? Because there's some really interesting things to actually note about this. And, you know, the first one, obviously revenues is up. That doesn't surprise us at all, right? We were expecting this already, right? If this wasn't the case, then, you know, there would be a bit of a problem. So that's good to see. You know, and in the next few quarters, we probably want to see this number right here get quite a lot higher. You know, we had 54% increase since 2019, but really we would like to see this sort of closer to maybe 70-ish% here moving forward, and maybe even higher, right, as we sort of get this technology rolling, like their solid oxide cell, like their carbon capture here, right? I think these are things that are really going to move it forward, especially with their deal with ExxonMobil as well. I think we're going to see, you know, sort of a much bigger increase in this number here. But what's really important to note sort of is their cost of revenues here, right? And what we can see, if we look at sort of their service and licenses here, right? This is actually the one where we came up in cost. But although we came up in the cost of revenues, we've also come up heavily in their revenues, right? We can see here we have kind of that 5.4 million in revenues for service and license compared to only 752,000 in 2019. So that number is increasing heavily. And with that, if we look at the percents compared here, right? If we take this number and this number and this number and this number right here, and we divide them. And if we divide both of those numbers, right, we get 1.5-ish times. So essentially our cost of revenue there was 1.5 times our revenues, right? But if we take a look at these two numbers from 2019, so that's 3,777,000, right, divided by 752,000, we get 5.022. So if we look at the difference sort of between this number and this number, then we can see how much their cost of revenue is actually decreasing, right? We had 5 times the cost of revenue compared to revenues for services and licenses in 2019, but in 2020, it's only a 1.5 times cost of revenue compared to revenue, right? So we can see that number is going heavily down, and that is really, really good to see, and that's exactly what we want to see here, right? Because we're getting closer again here to profitability within those revenue numbers here. Generation as well, right? If we go over to generation, 5,148 there and 5,400 there, we actually have seen a decrease in that number, but sort of this service and license kind of makes up for that, right? We've seen such a big increase there. So that's good. But again, if we compare sort of these numbers, and these are good because we have similar numbers here from 2020 and 2019, right? So we can really see sort of the cost of revenue comparison in this example here. And if we go to generation down here, right, we have 10 million, right, cost of revenue for generation compared to 22 million last year in 2019, right? So again, if we divide these numbers and we divide these numbers, we get sort of the multiple, right, of how much cost of revenue compared to revenue again here. And you know, I mean, these ones are easy, right? 5,000 compared to 10,000, essentially, that's 2 times. And here we have 5,000 compared to 20,000, and that is equal to 4.1 times ish around, right? So we can see again here, the cost of revenue for this is coming way down while they're producing still the same amount of generation essentially, right? They're making the same revenues on the generation. So we can really see a good comparison here of this cost of their revenue coming down, and this is exactly what we want to see. And again, we'd like to see this number continue to go down. We'd like to see this get to 1 times, right, eventually, and then to less than 1, right? Because as we kind of move down here, we're going to see sort of our revenues become greater than our costs, right? And then when we see that, we're going to see sort of our gross loss become a gross profit, right? And that's what we want to see. So that's important to keep in mind, right? You know, to make it easy, really, we could just look at this number right here as well. So in total, our gross loss is coming down here. And again, we can see here loss from operations coming down here quite significantly, which is again good to see here. And it means as we sort of continue to grow here, and as we continue to get more efficient, we're going to again see these numbers come down. And when we see that, we're eventually again going to see this net loss, and this net loss attributable to common stockholders become positive again, right? All right, now let's take a look at the yearly numbers in the same sort of operations and comprehensive loss statement here, right? And you know, before here, this was the 3 months ended, right? Q4. And here we have sort of the year ended, right? And the numbers are okay, but they're not even close to what we saw in the Q4 here, right? Again, we won't worry about product because we don't have any real product sales for 2020 here, as sort of they get rolling here with some of their products and some of those fuel cells, which are stackable, right, and modular. So this number we will see go up, but not yet. The main ones here that have gone up again is sort of generation right here, and services and licenses again came down a bit. We were expecting this, and what happened here is that the subsidiary of Fuel Cell Energy actually purchased the project there, so no more revenues are being realized from this Bridgeport service agreement here in 2020, and that's why we sort of saw this number come down. And again, it's not that much because there are some other projects that sort of came through along the way, like the one with EMRE, right? So keep that in mind for that. Again, not too much of a worry there. What is nice to see is, again, generation, right, coming up here. And of course, advanced technologies. And this is, you can kind of think of their advanced technologies a little bit like projects and new systems for the future. Again, increased mainly because of their joint development agreement with EMRE, right? So good to see our cost of revenues decreased by that sort of multiplier. And now we see that our revenues have actually, compared to our cost of revenues, have actually gone down by a multiplier here. So essentially that's not really what we want to see here, because we want to kind of see now this number grow instead of shrink, right? Because the higher this number is, sort of the higher of a multiplier of revenue compared to cost of revenue we have. But again, what is good to see here, right, is for generation, and we don't need to do the exact calculations here. We can just see 19,000 and 14,000, right? So we have 19,000 and 14,000. And again, 19,000 is greater than 14,000, right? But if we look at the generation here now, we have 27,000 compared to 31,000, right? So we have 27 compared to 31,000. And again, this number is greater than that number, right? So we can see we have higher revenues and lower cost of revenues. So again, we can see that the cost of revenues here is decreasing, right? Is 2.2 times higher than our revenues in 2019. And in 2020, we can see our cost of revenues is only 1.4 times our revenues in 2020. And again, it's easy to just see this if we look at it, right? Again, we can see total revenues is up compared to 2019, and cost of revenues is down compared to 2019. And that means we're seeing our cost of revenues as a percent decrease for the most part. And again, we could look at these individual numbers and we could look at the total number here as well. The gross loss, right, is again much lower here than it is over here. And then here, let's move on to this, right? We see net loss for the 3 months ended first here. We'll do that first, right? We have, again, a decreased net loss from quarter 4 in 2019 here. So that is good, right? Very good. But here, if we look at the year ended, we can see we actually have, again, that increase in net loss, right? And again, they say here the reason for this, and I'll read it here right off the actual 170-page financial report here, and that is net cash used in operating activities during fiscal year 2020 was primarily the result of net loss of 89.1 million. So it's really these operating expenses, right, and operating activities, which is why we're seeing an increase here. And it does have me a little bit worried, but again, they're still growing heavily here. So, I do expect this number to be actually down quite a lot sort of in 2021. When we get to the end of 2021, we see the financial results there. I do expect the number for 2020 to be higher than the number for 2021, which we don't know yet, right? And one of the reasons is because of these numbers right here. If we compare sort of the quarter by quarter here, 2020 to 2019, that decrease that we're seeing is quite substantial here, right? And, they did have to shut down one of their factories for a while as well. That was, I believe, in Q2 2020. So, that's probably part of this as well. So nothing too worrying there. And this, again, this number here, very good to see, right? And of course, two of the most important numbers here, earnings before interest, tax, depreciation, amortization, and adjusted EBITDA as well, right? Even kind of with this huge impairment expense, we can see we're still less negative, which again is what we want to see here, right? Because eventually we want to see this number become positive. But again, I don't see that for quite a while here. And that's because we still have to really work on bringing our cost of revenues down quite a bit before we see sort of this number get positive, right? And these are the quarterly numbers here for quarter 4, right? But again, we can see a similar sort of picture with the yearly numbers. Again, with the impairment expense here as well, right? And again, this is our negative surprise here, right? In quarter by quarter, negative 0.08, where we were supposed to have negative 0.04 for net loss per share here, right? But again, it's down again from this number. And so that is good to see. And of course, shares outstanding have increased again because, of these financing activities we've been doing here. And, to go along with sort of the financing activities and the less debt that they have, we can see here, December 4th, right? We know they had the underwriting offering of 25 million shares. And this is sort of what they made, right? 156.3 million after deduction of discounts, commissions, etc., right? So we can see extinguishing of debt, number 1, and to get rid of this debt, and that is what we want to see there. And then that also, and that was from Orion Credit Facility, right? And this included as well, they got another 11.2 million released from restricted cash, so that is good. Again, the company paid all amounts owed to Enbridge here, and this was approximately $21.5 million. So really good to see that these two kind of things here are paid off now, and they can kind of move on to, they still have the long-term debt, right? But that's okay. There's not as high percents on that, and long-term debt is good. Here, this is the other thing I wanted to still show you guys, and that's the backlog, right? And we can see sort of their total backlog has actually decreased here. But a big reason for that, and they say right here, primarily resulting from the decrease in fuel pricing, which has lowered estimate future revenue, right? And that again is because, oil prices came down. That means hydrogen prices come down. We've talked about all this before, right? And that is sort of the result here that has made us come down. And of course, I see this number going back up as sort of oil prices recover, and with that, hydrogen fuel becomes again more expensive, and all the other alternative fuels also become more expensive. But again, even with that, we can see 310% increase in advanced technologies, right? But I would like to see some of this backlog start to be coming down a bit as some of these agreements are fully executed. Again, backlog, it's a give and a take here, right? It's nice to see that they have sort of these potential revenues, and pretty much they will happen as their definitive agreements, right? But the other thing is, why have they not started to execute some of these projects, right? So that we could see, some bigger revenues here coming in. But again, we will see that eventually. So it's not a bad time again, to get into this stock. I was thinking of buying some shares this morning. I should have. We're up 2.19% now. But this morning we were down, and I was thinking, do I buy shares here? Or do I wait? And me, it's hard, it's really hard when bought shares originally at such a low price, right? Then you're asking yourself, why didn't I just buy more shares then? Why am I picking up shares at a $17 price when I could have picked up shares at 1.8? It's so expensive, but a year down the road, it's not going to seem like it was expensive at $17, So it's really a give and a take, and it's always hard to say. But again, FuelCell is already my biggest holding. So I'm, again, just going to hold off till we see sort of a big red day, any sort of share offering or anything, which I actually don't see coming up too soon because we have so much cash now. Anyways, that's going to do it for the video today. I hope you guys liked it. If you did, please like, subscribe, leave me a comment, and, share the video as well. And other than that, I hope you guys have a fantastic day, and I'll see you guys on Sunday.